The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. We are going to take a look at the gold market, folks. We are going to do a retest here. We just made the 786 retracement of the last 3 days ranges from Friday. And we will see if this is going to be the bottom or not. We are very, very close. We could easily get down. The old bottom was 1051. We're trading around 1057 right now, so we're not very far away. Silver is holding up much better. Silver is just barely below the 61% retracement of that whole move down from the 27th. And platinum, strangely enough, is actually up, which is quite a bit of a difference here to look at. I was listening to Andy Hecht and Tom before my show came in. I was listening to talk about El Nino, which is the warming of the ocean currents, which affect crops and weather and everything like that. And we've had some really strange weather, as you can imagine. It was 35 degrees here in Tucson this morning. It was actually warmer in Philadelphia than it was in Tucson. So it's been a big difference in the weather here. So we'll be watching for these grains to turn sometime. I imagine sometimes after the first of the year. They're still going lower. We're new lows now in crude oil. We haven't made new lows yet in gold, but we're not very far away. And so this is a real test today in the gold, because we're getting very, very close, folks. We're coming into one of the biggest cycle points that we've had since May 19th, when we had that Mercury retrograde and new moon, which was the top in the New York Stock Exchange Index. We are having a December 4th is a really, really big day. I mean, it's just huge. It only has an orb of about 1 day, so it's either going to be Friday. I don't even think it'll be Monday. It'll probably be Friday, and with that non-farms payroll, with everything going great and everything, this will be something that we'll be watching now. We could get an easy, one of our first of many interest rate, rates to rise. An increase in rates by the Federal Reserve, then I think that's a possibility. We had a big rally in bonds yesterday, 2 full points from the bottom from the previous day. We're up above the 61% retracement now in the bonds, so it doesn't seem to be doing anything. The big news was the German 2-year note is actually negative. In other words, if you put your money in a bank in Germany, they charge you 0.4%, which is a pretty good deal for them, I think. So, but anyway, this is unusual. This has been going on since 1980, when Paul Volcker came in and put the kibosh on all this stuff. So this is going to stop one of these days. When that party's over, it's going to be very interesting to see what happens, from that level. So, as the old Chinese curse says, may we live an interesting time. I want to congratulate Mark Zuckerberg and Patricia Chan on their new little baby girl named Max. Going to be the richest baby in the world when she just was born last week, and he's going to give he said he's going to give up to $1 billion away each year for the next 3 years. Well, I'm going to match that. I'm going to give up to $1 billion a year for the next 3 years. Now, that could be 50 cents. It could be $500. But, what does up to $1 billion mean? I mean, the guy's got $40 billion. You can't spend $1 billion, folks. Give me a break. It's impossible to spend $1 billion. You can, throw it in the wind or pee it away, as they say in the Italian trade, but you can't spend it. I mean, the most expensive house in America is only $125 million. So I guess if you had 10 of those, who knows what that would be. Okay. All right. We're going to be watching this gold here the next few days. It might even be into this. We have such a big cycle date here on December 4th. It's just really big. It's just a huge cycle. So we got to watch this very closely these next 2 days. It could come in a day or two early, but I doubt it. My guess is it'll come right on the 4th, and the reason for that is we have that non-farm payroll, and the whole world watches that with anticipation all across Asia, Europe, North America. Everybody's watching it. So the slightest move in these numbers will make the thing work. Danny from Atlanta has asked me a question about where does this cycle come from? It comes from my good friend Bill Ehrman of Ermanometry in Nashville, but there's also a gentleman in Europe that I've known for many years. He's been incredibly accurate of what he's been looking at. He's been waiting for this for a very long time, so we'll wait and see if this is going to be it. It's based on the mathematical progression of numbers out of the Fibonacci sequence. If you'll remember, when we were topping on May 19th of last year, this year, let's try it again. We had that Mercury retrograde and new moon. We had Norm Winsky on from Astro Trends, but that was also one of these big mathematical dates. But the one on May 19th was the biggest of the year, and the reason for that is the fact that it is a situation where you have a perfect 1.618 expansion on the long-term weekly charts going back to 2000 to 2007 to 2015. Time and price, everything came together at that time. The 1.618 expansion number on the S&P 500 was, I believe, 121.38 was the exact number, and we came within hundredths of a point of that. And of course, we had a 12% correction from that level. So we want to be able to see if this is going to be the case again here also. So we'll see if that will make it actually stop it. But if we get above that 2138 level, that's going to destroy the best pattern we've had here ever, as near as I can tell. So we'll wait and see. Now the New York Stock Exchange Index, we did go above the 61% retracement yesterday, and all that emotionalism that we have, and we can certainly do it again too. That's not a problem to be able to do that. But that's neither here nor there. The overnight markets, China was up slightly, as was Hong Kong, I believe, just very little bit. Europe was down a little bit. Remember that, Shanghai was up 2%, but that thing jumps around like they can move at 2% in the last hour. So that's not really a fair market. I know they have a lot of volume over there, but I don't trust it. I've watched it move, and there's somebody playing games over there. So I don't trade that market, so I'm not really interested in it. Now the DAX I do trade, and the DAX had a huge move yesterday, and then today it sold off a little bit, but that's still, it's down just a few hundred points, which is nothing. The DAX can make that up, in a matter of minutes. But we did have a big move up in the Dow Jones stocks, and also those stocks in the S&P 500, and then those few stocks in the NASDAQ that make everything jump up. There's 140 stocks, folks, that are doing all this stuff, and I think that's going to come back to haunt us. We're going to find out here. We don't have to wait very long. We only got a couple more days to wait to see if this is going to be the case. But that's what it certainly looks like to me. I wanted to bring this long-term pattern that is still in play. It hasn't changed a bit, even though we've had all this ups and downs here since November the 2nd. We've been a month now where we've been up and down, and we're still following this same pattern here of the New York Stock Exchange weekly chart, where we had the break, then we had the rally back, to the exact percentage. I mean, they went exactly to the exact percentage, folks. I mean, to the exact, I mean, we're talking about into the thousandth decimal point. That has to mean something, that high that we made on November the 2nd. So this is what I'm watching. So it's still holding up. We still have the same divergence that this stock market has been showing, where we have a lot a lot of divergence. There's certainly not the broad market, because more than half the stocks are still under the 200-day moving average out of the S&P 500. And but it's just these few stocks are doing it, and that's what makes it go. And so you can't stand in away from it. There's no question that we live in a tech environment with all the stuff that we have. So it's just something that we need to really need to keep an eye on, because it will be very interesting. We're most probably going to be, well, my guess is we'll most probably be up, down a little bit on the open, and then from there we'll probably have a pretty good move, up or down, whatever it happens to be. Doesn't really make any difference, because nothing really happens for me until Friday, because that's the day. And if we have if we start down next week on Monday, then that's going to confirm that December 4th date. It could be the 2nd, it could be the 3rd, it could be the 4th, because this is looking at numbers that go back well into the 1950s. In other words, these cycle dates, they act like mirror images of each other, and that's why they're so very important. They're related to astrological dates, but these are more they fit together better in a geometric pattern. That's the best way that I could explain it. And it's been the best explanation I've seen of how markets work. But it's based on those same patterns that we look at, all the time. One question that someone's asked me this morning is about the banking stocks. They're still holding up pretty strong. You had a pretty good move in Morgan Stanley yesterday, because they reduced their trading facilities by 25%. And folks, that's probably a good idea, because if you take a look at it, 25%, they're getting rid of the lower 25% of their traders is what they're doing. They'll pay the other 75% more, is my guess. So that's probably a good move, and that's probably why the stock was up. So that's what that looks like. But I really think that what we're doing is we're coming into this December 4th date with a high expectation. I mean, I said that starting Monday, that it's going to be hard for the market to bottom or to top right now for several reasons. First of all, the last 3 days of the month and the first 2 days of the month are the most positive of the year, and we're just finishing that today. So that's what we're looking at. We're going to take a little break here. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened, and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
We're talking about that December 4th cycle date that we've got coming up here. Friday, it's also non-farm payroll day. The Fed is acting on the following week, the 13th, but my guess is they're probably going to do something. You hear mixed reports, but that's what you hear all the time. They should just get it over with because the anticipation is going to be more than the pain, and I don't think there'll be much pain. But, you know, what do I know? We'll have to wait and see. I have to tell you a really funny story about this date coming up we have here in December. I was born in Indiana, most of you folks know, and I was always interested in basketball, going to school in Indiana, and one of the some of my buddies from high school and college, you know, still live in the same place, and one of them has just been in a nursing home for quite a while. He's going downhill very, very fast with dementia. And anyway, in 1979, Indiana State, that's where Terre Haute is, where Norman Winsky went to school, and I went to school there too. And they had a player there from French Lick, Indiana, named Larry Bird. And my buddies kept telling me how great this guy was. And Indiana State had never been on a national program for basketball, you know, like on a Saturday game. And so Bird was coming up. They were about, I think they had won 20 games in a row, and they were going to be playing Bradley University on Saturday on the game of the week. And Al McGuire and Billy Packer were the announcers, and my buddies were having their big at their man caves there in Indiana, and I was in California, and we were talking on the phone, and they said that Bird was going to score 50 points. And I said, come on. I said, he's only averaged 33 points, and they're against the best defensive player in the league. And the guy says, wow. He says, let's make a little bet. And I said, what do you want to bet? And they said, bet me $50 that Bird would score 50 points in the game. And I said, sure, let's take the bet. So at the end of the first half, Bird has made 6 points. He can't make a basket. He looks terrible. And I'm calling these guys up, and I'm giving them the old razz. I said, you guys think this guy is Oscar Robertson, who was the greatest basketball player ever to come out of Indiana? He averaged a triple-double in the NBA during 1971 and 1972. And so they said, we want to press the bet. I said, you mean to tell me you think he's going to score 46 points or 44 points in the second half? And he said, yeah, we think so. Anyway, the second half started, and Bird came out, and he made like 6 or 7 three-pointers in a row, and then it was all over. He tore it up, and he did really good. And I became a Larry Bird fan at that time, so it was really interesting, and I was able to follow his 13 years in the NBA when he played at Boston. I never missed a game on the Massachusetts Sports Network watching those games. Anyway, back to the market. The Chicago Mercantile Exchange is a good proxy for what is going on with the bond market, folks. This was sent to me by John Murphy, and it basically shows that the price of the CME stock itself, CME, is really close to what happens with the rates. And as you can see here, we're making a move up here, which tells us rates are going to be going higher, very, very close. And we've had a 10-day run in bonds here. And that's, very unusual for that to happen, because we should be getting ready to see higher rates, and yet bonds are going up, which means lower rates. Now, there's talk about there's a shortage of Treasury bond paper. And we'll see if that's going to be the case or not. I don't know. But they have been very, very strong in the bonds. They went way above the 61% retracement that we were talking about yesterday. I said you had about an 8-point cushion there, because if it went above 156.08 and we were looking at 156, we were probably going to go to 157, and we went up to 157.10 yesterday. So we'll see if that's going to be the case or not. We'll have to wait and see. We'll have to I don't know when this Federal Reserve is going to happen, but it's going to happen. It'll probably be a surprise. But believe me, if you think that stuff isn't leaked, you're being very naive. Those of you that have heard a guy named Alan Greenspan, his best friend was Robert Rubin, formerly of Citibank, ex-U.S. Secretary Treasury, and they used to meet for breakfast 3 times a week. And I'm sure he never said anything like, gee, I wouldn't want to be short the Treasury bonds this week. I'm sure that he would never share information like that. That would be highly inappropriate. So we'll have to wait and see. We do have the European Central Bank is going to be also meeting, and I believe they're at the beginning of next week, as near as I can tell. I haven't checked it. I don't follow it that much. I do follow the interest rates over there, because negative interest rates in Germany really means a lot.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
It's true. Life is all about choices. At Everbank, they're making it easy for you to make a smart one with this special cash offer. Open a new yield pledge money market account with funds from another financial institution, or deposit new funds into an existing yield pledge money market account, and you could earn up to a $500 cash reward. And if you're opening a new account, you'll also get their new higher 6-month bonus interest rate, along with their yield pledge promise that ensures your yield will always be in the top 5% of competitive accounts at banks nationwide. Open a new account or add to one. It's your choice. To qualify, you must meet balance and other limited time offer requirements. Go to everbank.com/TFNN for details and deposit options, or speak with one of their banking specialists at 1-855-750-4051 for more information. You must act by December 31st, 2015 to be eligible. Everbank is a member FDIC.
TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pesavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on Tiger TV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, we're back, and there's a little bantering going back and forth here at Tiger TV about Yellen and Draghi. And folks, these folks run the central banks. They can do whatever they want to do. And just because I don't think Yellen worked at Goldman Sachs, I know that Draghi did, but you know, they're going to do what they're supposed to be doing, I guess. And remember that the Federal Reserve, even though they're on Pennsylvania Boulevard in Pennsylvania Avenue in Washington, D.C., where the White House is, they are not a federal institution. It's a private bank. And so you want to be able to take a look at that. Now we're gonna look here at the Euro chart here for just a second, because I still believe in fact we're trading almost exactly where I posted this chart on Friday. It's really gone nowhere. And so this is the long-term weekly chart. I still think we're going to go down to 98 to 99 in the euro. And with the dollar, you know, if we're going to raise rates, that means our bonds are going to be, you know, yielding pretty well. Why would anybody in their right mind, this is the chart for the euro that we're looking at, but I wanted to show you the one on the yield that we talked about just a little bit earlier. This one I really don't understand, folks, because there is no reason in the world. Someone's going to have to explain it to me. Because let me get this a little bit larger so that we can see it a little bit bigger here. There we go. But why would anybody in their right mind, a country or a corporation or whatever, why would they put their money in 10-year German bonds at 0.46% when they can put it in the 10-year Treasury bonds at 2.2%? I just don't understand that. That's 5 times better on a country, and we certainly have the same ranking, if not better, than Germany does as far as a Standard & Poor's rating, is my opinion. But who knows? I'll have to leave that to the trading gods to figure this one out. But I really don't understand this one at all. I would think this spread would really be coming in. In other words, they should be, very, very close to each other. But that's not the case. Can you imagine today they have a negative interest rates over there? That's minus 4% to keep your money. Now Japan's been doing that for years, but they're controlled by the BOJ, so you don't these central banks, that's what they're for. A lot of people well, not a lot, but there have been a few people through the years that didn't believe that we should have a central bank. John F. Kennedy was the last one. In fact, they had already decided to bring out a new set of bills and made to the U.S. Treasury instead of Federal Reserve notes. And of course, he was assassinated in that same year. Whether that had anything to do with it or not, probably not. But who knows? But there's been a lot of arguments. If you ever want to read the stuff about this, read the book. The Creature from Jekyll Island, because that's where the Federal Reserve came into being in 1913 on Christmas Eve. So that's a really good book to read, and the power that they have. They are so far more powerful than any organization, including the armies that we have. It was, I believe it was Thomas Jefferson said that the banking system has more control than all the standing armies that a country might have. And I believe that. And I've heard other people quotes about that if you control the money supply, you control the country. And I'm pretty sure that that's pretty much what we're looking at. So we're having a little bit of a downdraft here early this morning, probably another buying opportunity coming in. So we'll see. But we're in this zone now between the 2nd and the 3rd and the 4th. The 4th is the big day. In fact, that's where I think we're going to be seeing a pop up. I would expect one more jab up, some, come to Jesus moment where everybody wants to be long stocks again, but we'll have to wait and see. The New York Stock Exchange Index is not showing the same thing, folks. It is still, far, far below the old highs. It's not taken out the 61% retracement of the high from November the 2nd as of yet. Now, we did get up to the 786 retracement of that move back on the euphoria that we had yesterday. And so that's what we're looking at. I've just been informed that Janet Yellen of the Federal Reserve is going to be speaking today at 12:25 Eastern Time. So that'll probably make the markets be jumping around, quite a bit. So we'll wait and see. The IWM, which is the small cap, we went up and we made the 61% retracement of this whole move down from way back in May to August back. We finally made that yesterday, and so we have this January effect where small caps gain on the large caps part of the time. So we just want to watch that to see what's going to be happening here with that. Regarding the commodities, folks, I believe we're down in the grains, the oil, the gold, the silver. All this stuff is going down. We're not making new lows yet in silver, but we're not too far away. But we've got huge ABCD patterns on the CRB index that we pointed out before. These are long-term weeklies, and I believe that sometime in 2016 we're going to have a pretty good rally. Whether it'll be the bottom of the bull market or just a counter trend rally, it won't make any difference, because if we can participate in it, that's what we would like to be. That's what we'd like to be watching. So this is the plan, is to follow this ABCD pattern here in these commodities to see if it's going. Everybody in the whole world thinks that oil is going to somewhere between $20 and $25 a barrel, which it certainly can without any trouble at all. But first, it's got to get below that old low down there at 38. We tested the lows of the nearby contract but they still haven't followed, to the downside. But there is, everybody in the whole world, even me, knows that there's a big supply of oil. All you got to do is look at the oil chart, and you can see that it's been going down. The same thing with gold. There's a big supply of gold. Otherwise, it wouldn't be going down. The other big news yesterday is what the IMF have given China SDR special drawing rights because they've been included now into the dollar index. I believe I don't know when that takes effect, but they're going to be at 10%, which is going to put them in number 2 spot right after the US dollar, which is 53% of the dollar index. They're going to pass Japan, and they're going to pass British pound, which they should because their economy is so much bigger than both of those places, and it should have a greater. Now, it's going to take a while for the foreign exchange markets to simulate the renminbi into the trading, but I know it'll be a wild one. It'll probably be nothing can beat the euro. The euro is by far the best trading thing that you could ever find. Ever, and we'll wait and see. Now, someone just told me that it's not going to be until October 2016. I find that really hard to believe, but I guess that's right. They do whatever they want to do, but well, that's more than 9 months, 10 months out. So I would think they would start, bringing it in a lot faster than that, because then it can make it a lot easier to get this whole process going, as we go through the thing of what we're looking at. And anyway, there's a lot of people that are saying that the SDR, the special drawing rights, is going to be the new currency of the world. Well, that's probably true, folks, and I know there's a lot of changes going on in the banking business. I don't know if any of you folks ever go to the bank to try to put in cash or withdraw cash. The rules now are tightening up, and if you don't know who your banker is, if you go to a strange bank to try to get something done, you're going to be really surprised. That's why these ATM machines I get it more and more popular, but they're trying to control the cash. I guess that's what Bitcoin is all about, but they're getting closer and closer doing that. We'll wait and see. You folks don't remember this, but back in the 50s and 60s, we had a $500 bill, which had the picture of William McKinley, one of our presidents, and then the $1,000 bill had the picture of Grover Cleveland, and the $10,000 bill had Salmon P. Chase as the bill. But $10,000 bills were notes; they weren't for circulation. But the $1,000 bills and the $500 bills were in circulation, and I used to have a couple of samples of those, and I paid face value for them. But they're now selling at a $2,500 premium for each one of those bills, either a $500 or a $1,000 bill. If you wanted to buy one for a collection, they're $250. Well, one is they're both about $2,500 is what they are. So, this is how things have changed. That reason why those bills disappeared was because of the drug money back in the 70s, mainly marijuana, and they didn't want to have all these $1,000 bills and $500 bills, so they didn't print them anymore. And so whether that means anything not to you, I don't know, but I remember that from my old days of messing around in the old currency markets. I used to collect some of these things, so it's really interesting. Okay, I still, folks, believe that you should own some 1-ounce silver rounds, those little coins that are printed or stamped by the government. They're 1-ounce pure coins. I believe everybody should hold some of those. They sell for around $15 now, and I just believe even if they go down to $10, I still think you should start accumulating those. I've been doing that for more than 55 years, and it's been a very interesting time to see silver go from 5 to 49 and 49 down to 13. So it does have some wild swings in between, but I still have to believe that when they're playing funny money like they're doing with the Federal Reserve, putting in $4 trillion into the economy through this quantitative easing, that's just not a good thing. That's not a good thing to do, is from what I can understand. From what I understand about it anyway. We'll have to let the trading people decide what they're going to do with that. But it doesn't make any economic sense to me of why that works or not. I've had a question about the this cycle that Larry Edelson brought to us. It was forwarded to me by one of our folks here in Tiger TV. I just wanted to bring this up because we are in the zone now. In fact, we're a couple days. The actual low came in pretty much at the time. Whether this is the test or not, I don't know, but we want to follow this. Now, this is a neural network that's been running for several months. It's actually been doing pretty good. We want to see, we're over it right now, so that's why we have to take a look at this. But the pattern in gold is also telling us the same thing. Somewhere around this 1050 area, we're probably going to be running into a pretty good bottom in the gold market, and then we'll wait and see what's happening with the rest of the things that we're taking a look at. Okay, now we'll see here. We're going to probably have a nice little rally starting already in the Nasdaq. We've had a nice move. We got gold going down into new lows again. Crude oil making new lows, and the stocks are still holding up, relatively well. Especially the Nasdaq stocks. They jump around quite a bit. The Nasdaq went up and made a new high from overnight. In a matter of about 10 minutes, it did that. We haven't done it quite yet in the S&P, but we're not very far away in there, so we'll be able to see if that's going to be the case with this. But it looks like gold is going to get down here and make this 1050 area. The old low was 1051 and 10. So, and believe me, there's another number down there at 1039. That equals that old low that we made back there a year and a half ago when we hit 1039. Then we rallied $170 an ounce after we hit that one. So the pattern is still here, but the bottom's not in yet. That's basically the bottom line of what we're watching here. So, keep that in mind, that we could get down all the way to 1039 in the gold. That's a 1.618 expansion of that last rally that we had, which was $120. If you take that 120, multiply it times 1.618, you're going to get to your level here at 1030. And how you figure that is that you just go from 1192, subtract that, and that'll take you right down to that level, that you're watching. So that's the bottom line of what we're looking at here in the gold market. We still got a chance, but it's a slim chance. And whether it's going to happen or not today or tomorrow, we got that big cycle day on the 4th. And, there's always also the possibility that the 4th could come and go and nothing could happen. And that doesn't happen very often, but there's that possibility. And, maybe the stock market is going to go up forever. There's always that possibility too. So I think we have to just wait and see, what the next leg of this thing is going to be, because it's a pretty wild one when you look at it. To have this kind of a move, to move from October the 8th, which was that big cycle date where we made the big Gartley patterns down there, that was a huge move, and that's telling us that we most probably want to get ready for the next leg here, and we should be starting it here within a few days. That's the way it looks like from this end, but we'll let the market see what's happening. With grains are still weakening. We got wheat breaking down. It's now down below the old 786 at the 477 level, and we'll just wait and see, how the rest of these things turn. I don't think the grains are going to turn until the early part of the year. That's just a seasonal thing that you usually see. So.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Okay, looking good, Billy Ray. Feeling good, Lewis. Our gold is only $5 away from what we've been waiting for, $10.50. It's going to get there very, very shortly. So we'll see if it's going to hold that level or not. Remember, there's a level below that, $10 at $10.39. I think we're close, but the $64 question is whether it's going to be there or a little bit later. My guess is that it's probably not going to be today. It'll be most probably tomorrow because we're down quite a bit now on the day, and that means it's usually going to start to accelerate. The stocks, other than the NASDAQ being up, the rest of the market is a little bit weaker, but here again, that's too much. The euro is getting ready to break below the old low here down here at the 105.60 level, and of course that sets up a much higher level or much lower level in the euro, which we are still looking for it to go to 99. The key date, I'll just keep repeating it through Friday, and we'll see if anything happens with it. But that's what we're watching here in this, is that we're probably getting ready to see a pretty good move in stocks starting next week, and everybody is aware of the what do they call that thing? The January effect. And believe me, the January effect is a probability, folks. It's not a certainty. So keep that in mind also. So that's the main thing. Someone's asked me if I would be a buyer of the gold at the 150 level, the 1050 level. I'd have to wait on that. I took a little nibble this morning at it. It moved a little bit, so the risk was extremely small. At that 1059 level, it rallied a couple of dollars, and then you could raise your stop to the, underneath that level. Because once it went below 1059, it's the next level had to be 1056. And of course, we hit that, and now we're trading at 1054. So that's it. The euro is weakening rapidly now. So it looks like these stocks are going to have a lot of things running for them here if these currencies, if the dollar keeps strengthening like that, because that's going to usually weaken stocks. That's what usually happens, but we live in interesting times. Okay, folks, live every day in an attitude of gratitude, and may God bless.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.